So this is what we have learned in the previous class, right? We learned about RSI, how to use it, and of course, what not to do in the RSI. Okay, because as I said, if someone is a beginner trader, usually what they do is they sell in the overbought zone and buy in the oversold zone. Okay, which is not a good thing to do, of course. Okay, as we discussed in the previous class. We also discussed how RSI is a restricted indicator, okay, and it has some restrictions regarding the market. And of course, market has no restriction. It can go from $1 to $10,000. Who knows? Okay, but RSI can only go from what? From zero to just from 0 to 100. That's it. Okay. Below 30, that's a oversold position. Above 70, that's a overbought position. Between it, it's like a medium position. You can say this 50 line is a median one. Okay, and if we get support from this 50 line or a 50 line region, then we can expect the market to move in the upper direction on a one-day chart. Okay, so this is what we discussed. RSI, the full form of RSI is relative strength index. So what we are trying to figure out by using RSI is the strength of the market. Okay, and strength generally comes from the buyers. So we usually talk about buyers in RSI. So if the buyers are increasing or the buyers are decreasing, something like that. Okay. Then we discussed about the relationship between the market price action and RSI in the bull market and also in the bear market. And then we discussed how to use RSI properly. Okay. And of course, we compared 2 points in RSI. So it's the first word is relative, right? The full form of R is relative strength index. Okay. So when we talk about relative, that means we're trying to compare 2 points. Okay? We always try to compare 2 points or 2 people or 2 objects or something like okay? Something with another. Okay. So that's what we're trying to do in this case. Now today, we will talk about MACD. Let me show it to you 1 second. So today we will talk about MACD. Now you can see MACD is calculated by subtracting 26 period exponential moving average EMA and 12 period EMA. Okay, so there are 2 EMAs. You might have known about 20-day moving average, right? We discussed 20-day moving average in one of the classes. Okay, that 20-day moving average was a simple moving average. Okay, but this EMA is an exponential moving average. Okay, there is a difference in the formula. Maybe if you can Google about it, it will be easier for you to understand. We don't have that much time to discuss about this particular topic today. But there is a difference between simple moving average and an exponential moving average. So in simple moving average, what we have used 20-day moving average. If you remember, 20-week moving average, 200-week moving average. Okay. So this topic we discussed right here, 20-week, 200-week, 20-day. So this was simple moving average. In MACD, what we use exponential moving averages. Of course, we don't have to go into such details. But just understand that we use 2 moving averages in MACD. One is 26 period. Now that period can be changed, of course. So if you are using a one-day chart, let me remove everything, okay? And let me put MACD on the screen. So to put MACD, it's very simple. You go to indicators, then to technicals, and then you just write MACD, MACD. Okay. So it says moving average, convergence, divergence. The convergence and divergence of moving averages. Okay. Now what moving averages? 26 period moving average, 26 period exponential moving average, and 12 period exponential moving average. If I click on it, you can automatically see how something is added on our screen. You see these 2 lines? And let me make it a little bit bigger. Now on the left top corner, you can see it says 12 and 26, right? 12 and 26 is the moving averages. Okay. Fast length is 12, slow length is 26. That means this, you see this blue line? This blue line is actually this 26 moving average. Sorry, 12 moving average. Okay. This blue line, which you can clearly see on the screen, that is a fast length. And this orange line that you can see on the screen, that is a slow length. Okay. Now, what do you mean by fast length? Fast length simply means that the market will be moving, or this line will react towards the market in a quicker way as compared to the slow length. So you can clearly see this blue line. See, it moved first, it moved downward direction in the first, right? Before the orange line moved, the blue line moved first, right? You can clearly see. The blue line took the U-turn first, and then the orange line followed it. Okay. Same thing here. The blue line moved up first, and then the orange line followed it, right? Why the blue line is moving first? Because that's the fast length. The time period is 12, and 12 is smaller than 26, right? So of course, by default, it will move first as compared to the market. Okay, so this two length we are going to use, and this two lines are basically the exponential moving average regarding this two length. Okay. Now, what we are trying to figure out by using MACD, we have understood that by using RSI, we were trying to figure out strength of the market. But what we are trying to figure out by using moving average? Can anyone guess? What we are trying to figure out by using moving average? Okay, in a very simple word, we're trying to figure out the momentum of the market, or we are trying to figure out where the market is going to move. A little bit like that. Okay. We are trying to figure out by using the previous data, we are seeing that if the buyers are going to move up, or if the buyers are trying to move the market up or not. In a very simple, but that's it. That's what we're trying to figure out. Okay. Nothing more, nothing less. So of course, as I said in the previous classes also, indicators are only 20% part. They are not a strategy. So you don't buy or sell based on any indicator. You buy and sell based on a strategy. Indicators are just there to help you. That's it. Okay, they are not foolproof trading setups. Okay. In trading setup, we have two things: strategy, or in a strategy, we have two things: setup and indicator, whatever you can say. But indicators are only 20% part. They are not all of it. Okay. Now let's talk about MACD. The full form of MACD is moving average convergence divergence. Now, do you need to know the concept of convergence or divergence? No. Okay. MACD. Okay. Now, unlike RSI, MACD has no restrictions. So it has a median line which is 0. Okay. Then MACD, it can go to 1,000 or to 10,000 or to 20,000, who knows. Similarly, in the negative area, it can go to minus 1,000, minus 2,000, or minus 10,000, who knows, right? So it has no restrictions. In RSI, in the previous indicator, we had restrictions, right? But in this one, in MACD, we don't have any restriction. The market, or the RSI, sorry, the MACD, it can move from 0 or from minus 1,000 to plus 1,000 or plus 10,000 or plus 100,000, who knows? It has no restrictions. Okay. Let me draw a MACD for you. Something like that. Okay, I have created a very simple one. So that's a blue line, which is a 12 period moving average. Now that period is a variable. Okay. And let me use a yellow color. So you see this yellow color line is a 26 one, 26 period exponential moving average. Okay, remember this one. That's the exponential moving average. You can clearly see this yellow line is actually following the blue line. Why? Because this one is a slow length. A slow length, okay? So this blue line, which I have drawn, this one, this is a 12-period exponential moving average. This yellow line, which actually is the orange line when you use MACD, that is a 26-period exponential moving average. Now, for example, so this is our MACD, right? Now see this one, this red one and this green one, this line. This is what we call histograms. Okay, there is no need to go into details about this one as a swing trader, but if we have time, then of course we will discuss about it. It's not that much important, okay, but yeah. But you see this one. Now it says 12 and 26. Okay, if I go on a 1-day chart, it will become more easier to explain you guys. So see this 12, this blue line is a 12 one, right? If I go into settings and inputs, see this fast length 12. So this line is basically a 12-day exponential moving average. Okay. Why 12-day now? Because we are on a daily chart. That's why. If I go on a 1-hour chart, then it will become a 12-hour exponential moving average. That's why that period is a variable. So depending on what time interval you are playing, the exponential will change. Okay, the moving average, the exponential moving average will change. Okay, generally you will be using 4-hour chart or 1-day chart for this one, because if you get a confirmation on a 1-day chart regarding MACD, that's a very good confirmation generally. That's a very solid confirmation. Okay? And if you get a confirmation on a 4-hour chart, that is also very good confirmation. Okay? For swing trading. And if you are getting a confirmation on a weekly chart, that means that's a very good confirmation for a trend, for overall trend, not just for a month or two. I mean, not just for a 1 day or 2 day. It can be for a 1 month or 2 months or something like that. Okay. But yeah. So now we have discussed about it, right? We know that we are talking about MACD. MACD has no restrictions. There is a median line, which is just a zero, right? It can go from, this is like basically, this area is a positive area and this one is a negative area. Okay, that's it. Nothing to be worried about. Blue line is basically the fast length, which is 12-period exponential moving average. Yellow line is basically the slow line, which is basically 26-period moving average, exponential moving average. And most generally, the yellow line follows the blue line. Okay, that's it. Okay. Now, how to use it? As I said, moving average is useful to identify a momentum, or it is useful to figure out where the market is moving or where the market is going to move. Okay. One more thing, remember this thing. RSI and MACD. Okay. They're indicators. Again, I'm saying, I'll just repeating myself. These are indicators, just 20% weightage. Okay, not an 80% weightage. So always remember, do not use any indicator for buying and selling alone. You have to use support and resistance, trend lines, or something like that. But now, how to use it? So it's very simple. MACD, using a MACD is a very simple thing. Nothing to be worried about. So if you get this kind of cross, so if you get a cross like, let's say this is your 26 one and this is your 12. Okay. Now, if you see this kind of cross above zero, okay, so let's say this is my median line. If you see this kind of cross above zero, that's a very bullish cross. Okay. Above zero is actually a bullish area. Okay. This is actually a bullish area. Okay. And this one, the below one, below zero, that's a bearish area. Okay. That means if the market is continue to move down, you will find out that the MACD is almost below zero on a 4-hour chart or on a daily chart. Okay. But if the market is in a bullish area or the market is moving in the upward direction, then the MACD is almost above zero. It can get close to zero also, but it is almost above zero. Okay. So if you get this kind of cross above zero, that's a bullish cross. But if you get same kind of cross below zero, for example, something like this, then this cross is not that much bullish. Of course, I mean, I'm not saying that market won't move up. The market move, maybe it will move something like this. So the market will fall down first, and then it will move something like this, maybe. Okay, and then again it will drop. Okay, because this thing, this bullish side in a bearish zone, it has no power or very less power, you can say. Okay, so this signal is a bullish one, of course, but the signal itself is in the bearish zone. That you have to understand. It's a bullish signal, but in the bearish zone. Okay, so it does not have that much impact. Okay, so in this area, if you see this kind of thing, there is no trade or no setup basically. Okay, the next one. So that's our zero, right? Now, if you get this kind of cross below zero, for example, something like this. See how the blue line or the fast length is cutting the slow length from the above. Okay, remember this part. It has to cut from the above. Okay, now this is a bearish one. Okay, bearish. Now bearish signal in the bearish zone, what it will indicate? It will indicate that the market will move in the downward direction. Okay, so this is also useful for us. Now, but if you get something like this, that's a zero line. Okay. Something like this. Then this signal is of course bearish, but in the bullish area. It's a bearish signal in the bullish area. That means, of course, it will have an impact, but not that much. So, I mean, you should not take this kind of trades, to be honest. Now, let me show you examples. Then you will understand what I'm trying to say. But before that, let me give you one more information. Now, what is the most powerful indication for us? The most powerful one will be something like this. So if you get this kind of zero, okay, that's a median line, of course. Okay, once again, let me just refresh it. Yep. So that's a 0, 1, of course. And if you get something like this, now you see this, but this is one of a bullish signal, right? That's a bullish signal. Now, if you get a bullish signal close to zero, okay, or even something like this, even somewhere like this. Now see, this close can be above zero also, below zero also, okay? But this is a very bullish sign. It's a very, very bullish sign for the market. Okay? A bullish scenario. Okay. But if you get the something like this, So that's a 0 line, of course. But so this one is a bearish sign, okay? First thing. This one. So this is both is bearish, of course. And now the bearish sign, if you get it below 0, great, nothing to be worried about. But if you get the same sign close to 0, even in the positive area, but it has to be close to 0, okay? That is also a bearish sign. You don't have to worry. That is also a bearish sign. Okay. Now these signals are great signals to make money, to be honest. Okay. Now, if you get this kind of signal on a 4-hour chart, or maybe on a 1-day chart, or maybe on a 1-hour chart, that is a great, I mean, not on a 1-hour chart, but on a 4-hour or on a 1-day, it will be a great signal to make money as a swing trader. Okay. Now let me show you some examples. Okay. Now I think it will become more clear. Okay. So the first thing what we have learned, that if we get bullish sign. Now what is a bullish sign? You see, this can be a bullish sign, right? Correct? How the market crossed, but it is below 0, but yeah, that is a bullish sign. Okay, and the market it went up. This one is a bearish sign, correct? How the market went drop, right? See. Then this one is also a bearish sign. Now you see this one. Bearish sign in a bearish region. Bearish sign in a bearish region, right? This is a bearish region, right? A bearish area, and this is a bearish sign. Okay. What happened next? The market dropped. Now this drop is a good one. From 30 to almost to 18. That's a 41% drop. 41% on a Bitcoin chart. If you see the same kind of drop on any other chart, it will be more than 50% actually. Okay. Now let me show you the next example. This one actually. See, bullish sign in a bullish region. See, very simple, right? This is on a daily chart. What happened next? We all know. Boom, the market went up. Correct? So if you get this kind of sign and a trend line is broken, or a support is, or a resistance is broken, that's a great way to make money. Yep. And as I said, even a bearish sign, you see this is a bearish sign, right? Bearish sign, and you can see the MACD is moving down, but the price is still moving in the upward direction because it has very less impact. It is trying to control the market, but there is enough buyers available to push the market in the upward direction, even though on a MACD we are getting this kind of signal. Or bearish sign, but in a bullish area, doesn't have that much impact. Again, same logic. Bearish sign, but in the bullish area, doesn't have that much impact. Still the market went up. Now what we are waiting for? Now see, if Bitcoin wants to go down, then what we need? We need something like this. So we need the market to move up and then to drop. So it has to be something like this. This is what we need. And if we can get a bearish sign in a bearish area, that will, in that case, the market will fall down. Okay, and then you can take a short position. Here also, of course, I think most of the people have started taking also short positions. Okay, but this is how the market manipulates itself. First thing foremost, we broke this particular resistance level. The market moved up. People took long positions. The market liquidated all the long position trade. Now here we broke down right below the support level. Now people took short position. Now what the market will try to do? It will again try to liquidate all the short positions, and then it might also go down. This generally happens in the market. Okay, so we also have to be careful about this kind of situations. Okay, so now if we want the market to go down, then we need something this kind of situation where we have a bearish sign of MACD in a bearish zone or bearish area. Okay, and the market, then it will start following the normal direction. Now let me show you a few more examples of this. See this one. I mean, again, bearish sign, this right here. A very good bearish sign. So this is something, I mean, yeah, this is what we actually need. See, same logic. The market fall down, it entered into a bearish zone. The market fall down, it entered into a bearish zone. Then it moved up. Okay. Then again, right here, we saw a bearish signal in a bearish zone. Correct? Just remember this region. Remember this region, right? Okay. And this one. Now what is happening? The same thing what we need. The same thing we need right here. The market, you took a U-turn, great. We entered into a bearish zone on MACD, great. Now what we need is the same kind of thing. Same, almost. So the market is moving up, great, let it move up. But maybe in this month, I mean, we are at the end of this month actually, but maybe in the next month, we might see a bearish sign or a bearish signal of MACD in a bearish zone. And then we can take a short positions. Then believe me, so this area is the same thing. We're trying to find out the same concept actually. If that happens, that will be the bearish sign, right? Bearish signal. Now, this MACD is applicable everywhere in every chart. See this one, the market went down. We saw a bullish sign, okay, but it is close to zero. So it is valid. It is close to zero. Okay, on a 1 day chart, it is close to zero. So of course, that's a very bullish sign. See, that is a good one. But yeah. Now, this is applicable, as I said, like everywhere. Even if I go on a 1 hour chart, it will be true. See, bearish sign in a bearish area. Bearish signal, bearish area, market dropped. Again, bearish signal, bearish area, market went down. Bullish signal, close to zero. This is minus 0.04 actually. Bullish signal, close to zero, market moved up. Great, nothing to be worried about. Okay. Bearish sign, close to zero, market went down. Great. Okay. So this happens always, like it always happens on every chart. I mean, it's not just about Bitcoin or dot. You can find the same thing on Solana. See, bullish, market moved up. Again, bullish sign, market moved up. Bullish sign, market moved up. Bullish sign, market moved up. Right. So this is bullish. Bullish sign in a bullish signal in a bullish area, market moved up. Bearish signal in a bearish area, of course, the market will fall down. See this one, the market falls down. This one, the market falls down. Okay. So this is regarding MACD. Now you can say, but what is about the histogram? So the histogram is just there to tell us about the volume, like how much buyers are there, or if the buyers are powerful or the sellers are powerful. So in this area, see when there is a negative signal, you can see this one, this 4 red. Okay, they are increasing. So that means the sellers are powerful. Then we saw, okay, now the sellers and buyers are fighting with each other. Then again the sellers become powerful, and then the sellers become weak. And from right here, the buyers are increasing now. Okay, and also we are in the bullish area, bullish signal. So the buyers are also powerful in this region. Okay, so this is, I mean, not that much useful. You can also remove this. Can't see a setting chart here actually. If you want to, you can just remove this ones. Okay, this histogram. Okay, it will also be there. It's not that much useful, to be honest. But the one that we have discussed, this particular topic, bullish sign close to zero, that is very useful. or bearish sign close to zero, that is also very useful because it provides you a definite thing. It provides you something which is, I mean, almost 90% time it works. Okay. I think we do have very less number of people today. Maybe because we have rescheduled. Okay. But let me know if you have any question. And from tomorrow, I mean, in the next class, we will discuss about more topics. But if you have any question, please drop it in the chat. We have very less number of people, so I don't think we should start any other topic. We have almost completed MACD today. We might discuss more about it in the next class. But yeah, if you have any question, please drop it in the chat, guys. Or you can also use your mic if you want to discuss more, as we have very less people here. So wait for the market to break the support and resistance zone, and we look at the indicator. MACD, how long we wait after we see the cross? That's a very good question. If you see the cross, then you can enter on the next candlestick. That's it. Just on the next candlestick. So if you see a cross on 4-hour chart, on the next candlestick you can enter. For example, it's a hypothetical example, but this one. See, for example, you saw MACD crossing on this one, then you can enter on the next candlestick. That's it. Okay, you don't have to wait for like 1 or 2 candlesticks. Just you can enter on the next one. But it has to be, the cross has to be close to zero. That is very important. Okay. If you see, I mean, of course, I mean, for example, in this case right here, we saw a bearish cross in a bearish zone. That's a good indicator. Minus is minus in the trading world. Okay. So this one is a great one. So of course, I mean, if you see this kind of cross, you can enter right here on this candlestick. Great, nothing to be worried about. Okay. But if you see the same kind of cross in the bullish area, then there is no trade. Okay. Then you have to wait. For example, this one. See, there's a bullish cross close to zero. Now, if you see the already there's a cross, right? You can enter on this one, on this candlestick. Okay. And make sure. See, this always happens. I mean, let me give you an example of this. Most of the candlesticks, okay, almost 90% of the candlesticks have this thing, right? And you will agree with me. Okay, so this is a bullish candlestick, for example. Now, to create this candlestick, what happened in the market? The market, first it opens right here, then it goes down, correct? And then again it goes up. And then again it goes down, right? So this happens generally. So first what happened? The market went down. Then the market moved up. And then the market moved down, correct? So whenever you are trying to enter into any position, wait for at least 5 or 10 minutes. Wait for it. Okay. Do not directly enter, because see what will happen once you see that, okay, there's a new candlestick forming, you will enter right here. Okay. And then you will see, okay, now, I mean, that's a bullish sign. Of course, you are entering for a bull trade or a long position trade. Then you will enter and then you will say, okay, but now the market is going down. What should I do? You will quickly exit. Okay. Wait for the market to go down first, and then what will happen? Slowly the market will start moving up. And once the market starts moving up, so in right here in this area, what will happen? The market first will go down and then it will move up. That's a very, I mean, it's a very logical thing to do, of course, but it will, this thing what I'm talking about right now, it will come from experience to you guys. Okay. So now what in this area, what you will see right around here, you will see this kind of candlestick, something like this. And this is what you need to enter into a long position, and then you will enter. Because now if you enter, you know that the market is going to move up, correct? And then you can easily figure out where to put a stop loss. Of course, this can be a stop loss right here, okay, something like this. Okay, but when you are entering into a new candlestick, wait for at least 5-10 minutes on a 1-hour chart. If it's a 4-hour chart, wait for at least first 1 hour and then enter. Because generally, if it's a bullish candlestick or a green candlestick, first the market will go down and then it will move up. If it's a red candlestick, then the market will move up first and then it will go down. Okay, so wait for first 10 or 15 minutes on a 1 hour candlestick. But that's a very good question. Any other question, guys? Any other question? Please let me know. Let me show you one example. Now you see why I said the market might go down. Remember, I told you market might go down. First and foremost, even in the previous classes, I have mentioned that okay, the market is going to move up. Why? Because of this weekly chart. See, on a weekly MACD, we saw a bullish, a bullish signal. See this one, and that's why I said okay, now the market is going to move up. Okay, now what we are seeing some kind of bearish signal. Even though this bearish signal is in the bullish zone, but it will still respect it a little bit, at least little bit. I'm not saying the market will fall down to 15,000 or 10,000. What I'm trying to say, it can, something like this can happen. See, the market here, it went from 58 to what? 36. Okay, 58 to 36, or maybe let's say half of it. Now here, if it respect it, then maybe we might see a fall till 30 or 25, something like this, because it has to respect. There is no way it won't respect this particular thing, right? You can clearly see we are getting a cross, a bearish cross in a bullish zone of Bitcoin on a weekly chart. It has to respect. There is no other way. But you see how easy it is to figure out where the market is moving for the next 4 or 5 months, let's say. Here we knew about this one from the month of October, November, December, and January. Right? At least 4 months is there. So throughout this 4 months, we know that the market is going to move up. Now we are seeing this kind of situation. Then here, of course, market will move down. Okay, we just have to wait a little bit, and we have also 2 or 3 months left for the next bull market. Okay, guys, let me know if you have any more questions, please. If not, then of course we will continue about. So do we use all the indicators or choose one? Till now, we have only discussed about 2 indicators, RSI and MACD. Okay. In the pattern trading, I will show you which one to use with which setup. Okay. You have to use one indicator for one trading strategy. You don't have to use 2 indicators for each trading setups. Just one trading set or one indicator with one strategy. That's it. But that we will discuss. Okay. For now, you can just practice by using all the indicators. Okay. And mostly you will only use 2 indicators, MACD and RSI. That's it. You won't be using any more than that. Okay. But any other question, guys? Please let me know. We will try to discuss more topics, or we will try to discuss more about RSI in the next class also. Sorry, the MACD, about MACD in the next class also. Okay. Let me know if you have any more questions. Okay, if not, then thanks for joining. We had it's a 45-minute session only today we had, but it's okay. We will discuss more about MACD and volume and pattern trading in the next class. We still have 2 more classes to go. Okay, we'll try to complete as many topics as we can. Okay. Okay, thanks for joining this class. I hope you enjoyed it, found it useful, and have a great weekend. Okay, bye bye guys. Have a nice day. Take care.